whole question of it, if it's not the U.S. REITs, then it's who? And do you sort of see more of the European companies, the Asian companies, maybe even the Canadians, growing, diversifying themselves, and being the globalization players, in addition to some of the large caps in the U.S.? But I'm just curious how you think about the landscape and whether you think it goes the other way. We spent a lot of time talking about the U.S. guys going global, not as much as the others coming here.
Yeah, look, the U.S. going global makes potentially more sense than the other way, only because if you're going to be local somewhere, this is the biggest market, it's bigger than the rest of the world combined in terms of value of commercial real estate, and it tends to be ahead of the curve by virtue of that in the scale and professionalism of the organizations that were built, with important exceptions, Australia being one of them, and I'll talk about that in a moment. But what Chaim talks about, I think, is one of the most important pieces of the maturation of the industry as you move forward. It's this exporting operational excellence. And I think Chaim sugarcoated a little bit. When we were in the fund business, our favorite thing to do was to buy small, immature platforms, grow them, professionalize them, add proper accounting, finance, and grow the talent base, and then sell them to someone who could appreciate that. And that's certainly true to we have a very sophisticated real estate industry around the world among the big companies, but there's certainly plenty of room for the companies that got to the 20, 30, $40 billion, $100 billion in the US. It's because of operational excellence, scale, financing, and other things that are clearly exportable, and in certain cases, some of the time can overcome the detractions. But who should do it? Look, all the small countries historically, and Singaporeans, folks from the Middle East, in particular Australia, Holland, Canada, these are countries with much bigger capital formation than opportunity in their local real estate markets. Israel is a similar example. Small country, a lot of capital. Chaim's business was really formed as a vehicle for Israeli investors to get global diversification with a locally listed company. You don't own a lot in Israel, given the fact that it's
a small country.
Small country, but so is Holland, so is Canada, so is Australia from the point of view of how much investment real estate is there. And so the real estate companies in those domiciles have to look globally to take advantage of the capital markets locally and to provide investment products for the local world. So I think all of those are many of them have done it privately more so than publicly. So Singapore is a huge investor, but you don't see a lot of, absent the logistics business, you don't see a lot of global companies with a lot of private capital. It's true of all those other areas as well, and so very sophisticated investments coming out of those kind of UK as well, right? When the capital markets grow beyond the capability to invest. But what the US has is huge infrastructure and the ability to build a big company in a single market and hone and gain expertise and talent. Going overseas, you'll have to attract local talent, but it provides a pretty attractive base to do it from the US as well. Absence of tax structure for the moment, which I'm assuming over the balance of our professional lifetimes we'll figure out a little bit more.
There's enough lawyers and accountants in the room.